Welcome to the 2008 Hedge Fund Compensation Report, brought to you by Jobs Digest. My name's David Kochanek, publisher of Jobs Digest. I'm excited to bring you the results of our 2008 Hedge Fund Report. The report is based on actual responses from industry insiders. We're going to cover a lot of quantitative data here, and throughout we'll also sprinkle in some qualitative information as well. In fact, you're going to see some thoughts from those who participated in the survey directly. We've broken up our report into 5 different videos, and we did that to make it easy for you to target the information you were looking for and be able to find it without having to search through too much video to get the information. Here's what you can expect from this particular video. What we're going to cover: level of earnings, bonus versus base, who makes the most money inside the fund, and what are the size of the earning ranges. First, a bit of methodology. The data was gathered from hundreds of fund managers and employees in summer of 2008. We had firms both large and small participating, and we had responses from all over the world, with a concentration of responses from North America, and all response information was kept confidential. Oftentimes we look at web page or survey responses or client lists, and we want to see the most recognizable names. Clearly we've got the most recognizable here participating in this report. But those who are working in very small hedge firms know that bigger isn't always better. Both compensation policies and job security seem to be issues with these larger firms, especially in this current environment. We found a huge range of earnings, and we find that the earnings really vary significantly depending on one's responsibilities and experience, but it goes beyond that. Typically, there are 3 primary drivers in the compensation formula for hedge funds. First is experience, performance of the fund, and size of the fund. Oftentimes the hedge fund industry is referred to as a meritocracy. However, many of the respondents told us that their bonus is completely disconnected from their individual performance and instead based wholly on overall firm performance. The overall cash compensation number, the average, grew 4% over last year, and the number is $260,000 US. You can see the ranges here are pretty significant, with the majority of respondents being in that $100,000 to $250,000 range. Now, you'll also see the 2 ends of the spectrum, more than $1 million and $50,000 or less. Now, you might think $50,000 or less, we're in the hedge fund industry. They couldn't possibly be doing that in New York City. And that's exactly right. We'll talk about it a little bit more later, but understand there's a significant movement of offshoring or taking that work to other countries that is much cheaper than trying to do it here in the US. Now, once again, this year's results show that the more money you make, the more you rely on the performance compensation, or carry. We define carry as the percentage of the fund's profits that are awarded to the fund team. Typically in the industry, the total carry number is 20% of profits. What we're looking at here is the breakdown of how people made their money. And you can see those that made more than $1 million, they only had base compensation of right around $200,000. Those that were in that $500,000 to $1 million, again, just over, probably $220,000, $240,000 in terms of base compensation. And the range from $200,000 to $500,000, there's not a great deal of variation in the base compensation. So here's what you need to know. When you're switching firms or joining a hedge firm for the first time, you really should be focusing on what have the bonuses been, how has the fund been performing, because that is the #1 driver of total compensation. Again, we've got some on the lower end, and that's due to the international presence of respondents and the continued trend for offshoring. The average bonus paid was 49%, so just about half of total compensation. This graph is showing a comparison from what people believe their 2008 compensation to be as compared to 2007. About 13% said they would earn a full 70% more than last year. And about the same amount said that they would earn less than the previous year. Some already had lower expectations. Again, this was summer of 2008. That 12% was already witnessing a market shift, and that was well before September and October of 2008 when the financial markets started to melt down. So let's look at compensation by title. Clearly, the highest earners include the partners, principals, directors, portfolio managers, and CFOs. But an important thing to note, in fact, they're not even on this list here, is that even the administrative non-investment positions such as IT support and ops managers still average over $140,000 a year, a pretty significant earning for someone who's not in an investment role. So here's the big picture, and it's broken down by title. You can see that the majority of responses came from analysts, portfolio managers, traders, and directors. The average base was $133,000, the average bonus about $125,000, for a total comp of about $260,000 on average. What really stands out here is the ranges. We can find that titles have tremendously different responsibilities, and that's going to account for some of it. We mentioned we have many international responses to the survey. The offshoring trend continues. Interestingly, the majority of responses from people reporting from India came from employees of big-time players in the industry. We're talking about the largest funds, the largest firms. We'd like to invite you to visit alphacalling.com. Alpha Calling is our hedge fund careers insights blog. It's made up of industry insights from interviews with recruiters, news, hiring information, compensation information, and even interview questions. So take a look. You're sure to find something of interest. So that does it for the compensation summary. As I mentioned earlier, we have 4 other videos that talk about specific aspects of the hedge fund compensation report, and we invite you to take a look at any one of these. If you have any questions or comments about the compensation report, feel free to send us an email at hf_compensation@jobsearchdigest.com. Thanks so much for your time. We hope you found this helpful.